How's it going, Bill?
Good. How are you?
Good. Well, we're just coming off of our 4th of July weekend. Actually, Bill and I both got out of the heat this weekend, and we're in cooler temps. He and I got to hang out at a fun parade and enjoyed time with the family and lots of hamburgers and hot dogs, which I can't look at again probably for like another 6 months or so.
Well, you did open my eyes to that half bacon, half beef patties. Those are amazing.
Yes, if you are ever in the town of Snowflake, Arizona, everybody, there is an amazing butcher up there that we highly recommend because his stuff is fantastic. It could be a her. I really don't know. I guess I assumed it was a he,
It was the
but
father's son that were there when we got in there. We loaded up a cooler full of stuff,
awesome.
ribeyes and yeah, bacon. It was amazing.
Oh, their
So,
bacon's great. I've eaten the bacon. I've made the bacon. Really good, and it's in their hamburgers. But anyway, so holiday weekends are always a little weird in real estate. It's either a boom or a bust, and especially in the summertime in Arizona. But honestly, this weekend, I saw a lot of activity, and I'm already getting calls this morning on properties I have listed. And I feel like things are picking up, but I'm not sure what's creating that right now. I have been suggesting because we had a slower spring, that demand that held back, like it has to get released. And let's talk about the rates a little bit because they haven't moved, but there's been some stuff in the news that maybe people are feeling more concerned. So share with us like why possibly the mindset is possibly shifting right now for that to happen.
well, I think the first reason is that people are back from vacation now. So I think now they're like, okay, it's time to get moving. School's about to start.
Yeah, well, in
Um,
Arizona, schools start early. Like some start
yeah,
as soon as
they're
like
next
weeks
week.
from now. Yeah, next week. So for us, it starts like mid-July to the beginning of August for middle, elementary, and high schools. Colleges are a little bit different, but
Well,
we're
there's
already
just
starting to see the people coming back.
I think on top of that, there's just a lot of pent up demand. There's been that
There is.
burst, right? People have to move.
Mhm.
They're getting to that point where they have to move, and if they could just get a little relief on that rate, I really believe that when rates do come down, it's not an if, it's when that supply will go away real quick. I don't think there's enough there, but looking at it, there's some cracks in the labor market that are starting to happen, right? There was the ADP report, new payroll, private payroll, and it was way lower than expected. Couple things like there's the initial jobless claims report that's coming out Thursday that hypothetically should validate that. You know, the Fed took
So when you see it was lower than expected, is that good or bad?
it shows cracks in the labor market. It shows less hires,
Less people getting hired.
less people getting hired, right?
Okay.
And that's been a concern of the Fed for a while, right? The reason why the last few months they haven't cut rates, even though inflation came down, was because they felt like the job market was too healthy. There's no
Gotcha.
cracking. There's people are getting jobs. People are they're able to handle the cost of living. So now this is showing some cracks, which I think have been going on for a while. I just think that they're finally coming out in the reports that the Fed looks at. So that will pressure them now. The market is pricing in no cut by the Fed in July. They have a meeting end of July, right?
Really? Because
Um,
there was some expectation that there may be a cut in July.
yes. Well, there was
But
expectation that there'd be cut in June too, at some point. But yeah, it seems like the market is being conservative
okay.
on pricing that in. But cuts are coming. I've heard rumors of the market starting to price in three by the end of the year, which is a pretty aggressive move.
What does
Uh,
that mean?
three cuts, so three-quarter cuts.
Oh,
Uh,
three cuts. Okay.
the Fed three separate times will cut. Sorry, this way would cut.
Yes.
Would
You don't
cut.
go this way. Let's go
No,
this
no, no.
way.
It wouldn't cut this way. It
We're
would
not
cut
going
this
up.
way. Whereas at the beginning of the year, they were pricing in 5 to 6.
Hmm.
Obviously, we've had one at the
At the
beginning of
end
the
of
year.
last year, didn't they predict like 12? I mean, I feel like this number
Yeah, it just
jumped
it
like crazy.
Well, I think what happens is just that the market isn't a normal market when it comes to the financial side of things. I mean, look at your 401ks, look at your retirement accounts right now. At
Yeah.
one point in March, we thought the sky was falling, and now we're all
But that's what
positive.
happened. That was our market. That was our peak market. And because the stock market changed, because that's what happens, especially people with
That's
putting a lot of cash down, all of a sudden they didn't have as much, so they didn't. But they still want the property. Now we're going to move into this summer. I think that it's going to be busier.
the money is back. And I think that honestly, like if rates keep trending in the right way and we start getting some help from the Fed, you're going to see a lot more demand. And I think that's why people are honestly seeing that move in the market, especially the savvier
Mhm.
investors. And they're like, okay, well, I want to start moving now, looking now while there's options. It is because there's a good chance that a lot of people go to the new builds because of the incentives, but they might not be able to keep up with the demand that's building. So I
Yeah, because
think you're
there's
going to
some
see,
wait time built into that, and then there's also some extra expense, right? Like you have to not only have your down payment, but you have to have the backyard and the window treatments and things that on a resale you may have already built into the property, and you could roll it
yep.
technically into your mortgage, where on the other side you may not be able to do that.
Yeah, and then I just think it comes down to simple supply and demand. I just think that that demand is going to crack, it's going to break through,
Mm,
and it's going to be very strong. So that's why I think we're seeing the combination of it. I think you're seeing people that they have to move at this
yeah,
point. They waited long enough, so you're starting to see that traction. And then we'll see where the next 2-3 months take us. But things are pointing in the right direction to get some relief,
good.
for sure.
That
So
sounds very optimistic.
yeah, I'm always a little optimistic. I don't like to be doom and gloom all the time. I'm
No, and
tired
I
of
think,
being.
I mean, I think our market overall is a pretty it's a pretty healthy one. It's a pretty optimistic one. I mean, of course, we're gonna have cycles right now, though, and it's good because if you are a buyer, it has been hard over the past few years to buy a home, and especially first time home buyers, which I'm just going to selfishly plug my new TikTok channel I'm going to be starting. It's called, my username will be never owned a home. And it's going to basically just be geared for first time home buyers because we've seen so many we've talked about this in past episodes too. The age has increased, but it takes into account so many different groups of people that are buying homes. And, single women being the number one demographic increasing exponentially over the past 10 years in buying homes. And there's lots of questions. And as a woman, sometimes you're afraid to ask questions because it's just sometimes in our nature to just agree and go, okay, and then try and figure it out later. Where, we want to make sure that everyone has all the answers to the questions. That's why I love how you and I spend a lot of time educating people, buyers. And right now, I think is the perfect opportunity because we can do the negotiations for the buy downs. We can
Yep.
do the negotiations on the price. I like the buy down better. I think it makes more sense to work into your payment versus like, having that payment right up front when I can do a 2% the first year or 1% the second year, and that third year is when it finally kicks in and odds are good
Yeah,
you're making more
those
money.
the temporary buy downs are great. The call that I had before this was a client that it has the final adjustment, right?
Mm-hmm.
So they've been rocking in the low fives, low sixes, and seven. Now it's gonna adjust up to the sevens. Well, now it's perfect timing for them to then refinance it into a fixed rate, maybe most likely in the mid sixes by the time we do it.
Oh, see, that's
So
gorgeous. Love it.
so it worked out perfectly for them, and the sellers paid for it all.
Yes,
That was the great thing about it is the sellers covered that closing cost, so it gave them some relief. And in that time, in that 2 years, I was just catching up with them, and she had gotten promoted, he had gotten promoted twice, so it was great. It was great timing. They're making more money now, so they could fit into the budget.
that's fantastic. And then I mean, we could do a whole other episode on how to
Oh
do
yeah,
recasts. And then you have enough equity in your home after 2 years if you put down like what percentage you put down, all those interest rates. And that's probably going to be another discussion. But there's so many opportunities after just 2 years of owning a home, what you can do, as long as you're not an FHA loan, of course. But you know, there is still when you have one. It's just if you're going to stay in that loan and not refinance, you can't recast and you can't get rid of your mortgage insurance.
yeah.
So,
There's
but
options there.
but
There's
there's
options to
options.
get out of that. There's always
There's
options.
always options. There's always
See
choices. That's what I love. Awesome. Well, thanks again for being here, and we'll see you all next time.
you next week.